Hi everyone. It's been quite a few days since I've seen you guys live on Instagram. I wonder how you're doing. I know I promised to be consistent, trying to come live every day, but unfortunately, travel comes in the way. Then events come in the way. Then Anand, of course, gives me a lot of work, which takes me away. And I do miss being live with you guys during those times. So I hope you've been doing well. I hope you're doing great and you did manage to invest something today. Today I did see Tata Motors correct and I took that opportunity to quickly swoop in and pick up some Tata Motors. Of course, staying within our Tiffin Coffee range. That is mine is around 2000. So I picked up a few shares and I was done for the day. The market did move negatively to start with. Then it turned a little positive. I don't know for what reason, became buoyant. Saw some smart recovery, as they say in the lingo, and then we saw the market closing. It did also do the same across Asia. Japan seemed to have done well too by end of the Japanese day of trade. What was curious is the Israeli-Iran war seems to be going warmer and warmer. Things don't look so great for the markets, and the rally in dollar and gold usually is very strong. So anyway, liquidity seems to be the play everyone's doing, and everyone seems to be feeling that they're going to be missing out something in the market. So anytime there's a slight correction, people seem to be running into the market. So be careful. This kind of markets are not sustainable, especially considering what all is happening macroeconomically, what all is happening geopolitically. It just doesn't make sense where the market is going. Anyway, that said, some of you did have questions. I will try and answer these questions. First one which got voted up, of course these questions are a little old, was shall I buy gold at this rate? I did not reach 200 grams. Or should I wait for the price to fall? Ramachandran 4878. Well, Ramachandran, I would suggest if you have not achieved your 200 grams to keep nibbling away at it. I'm not asking you to go buy the entire 200 grams at one shot. That is too much money to be thrown into gold immediately, but to keep slowly accumulating it. As long as you don't have a loan and you have health insurance and you have a liquid emergency fund and all these other things in place, and you have Tiffin Coffee money and you're considering Tiffin Coffee, maybe one day you do Tiffin Coffee in equity and one day you do Tiffin Coffee in gold. So you try and keep going at it little by little, and before you know it, you will reach 200 grams. If you try and run fully in taking gold at this price and then it corrects, you'll still feel miserable about it. Okay, if you're looking at it in the long term, then you're okay, because in the long term you'll be fine. But the mind does not work like that. So if Ramchandran, you suddenly go plonk a lot of money on gold, which I met a few of you in Coimbatore who had liquid cash and you were thinking about it. I met one person who had 700 grams of gold and they still wanted to buy more gold. And I was like, why? The person was like, in long term, I'm thinking about long term, I want to buy gold. Then I said, 700 grams is more than enough. And if you're looking at it long term, 10, 15 years, putting it in equity market will be far more valuable than, buying any more gold, is what I said to that person. I hope that person understood what I was saying and invested according to making what makes sense. And even if it's a lump sum, putting lump sum, I've shown this many times, putting lump sum in the stock market does not outperform doing small investments, different coffee investments over a long period of time. To the point, any stock you take, looking back in hindsight, and you just do the math, take it an Indian stock or an American stock, and I say I bought it 5 years ago for an X amount, then what is it worth today? Compared to taking that same amount of money and chopping it into pieces and doing it monthly for, let's say, 5 years, you would have seen far better return. And of course, your mental health will be much better for it. So I know I digress a little bit from gold, but the idea being, if you have lump sum, buy a bond, invest it in equity or in bits and pieces of gold. Even if you have a lump sum, don't go buy gold at these prices. You might feel a little pain if people start booking profit in gold. I don't see gold cooling off though, to be honest. The other side is also true, that if anything, gold is going to become more and more expensive, because even if the Fed cuts interest rate, that means there's more liquidity in the market. More liquidity means prices of things like gold go up even more. So keep that in mind. And the next question is, friend, it's me. How to get first 25 lakhs in 25K salary? Well, I'm assuming you have 25 lakh salary, and how much of it can you invest is the $1,000,000 question. And if you look at investing, uh, uh, let's say half of it, right? And there are many systematic calculators, and you can look at it online. And let's say we invest 12,000 rupees, right? And a time period of 10 years, and let's say we be conservative and say, let's say the market gives 14%. You should, according to the calculator, you would have 9 years, let's say, right? 9 years should get you around 25 lakhs. So let's say you invest 12,000 rupees in the stock market, you keep slipping on shares, 12,000 rupees, and we expect an average return around 14, which is pretty conservative to me. If you're investing directly into equity, by 9 years, you should be close to around 25 lakhs, probably around 24, 23. If it's very good, maybe 26 to 27. You would have invested around 12 lakhs, and you should have had an estimated return of another 12 lakhs, is what I'm seeing. Of course, this is a lot of caveats here. The caveat is that we have an average return per year of 14. So these things fluctuate year to year. On the 8th year itself might be a very good year. Bull markets have pushed it. Your 11 lakhs might be near 28 lakhs already. And the 9th year happens to be a bear market year. There's a global, financial crisis, and suddenly your whole portfolio can be down 15%. So these things, remember, if you have investing around 12,000 rupees a month, by 9 years, 9 to 10 years should get you to 25 lakhs. And like I'm investing 40,000 rupees a month, right? 40,000 rupees a month, and I'm saying I'm going to do this for 10 years. I put that in the calculator, right? So 40,000 rupees at 14% for 10 years, I would have invested around 48 lakhs, and the estimated return is around another 51 lakhs. I'm almost touching 1 crore at that point of time. So that takes you to 1 crore if you're putting 40,000 rupees every month. So all this is critical to understand when you're investing. All the calculations you can do. It's like weight loss. We're going to now start hopefully a fitness challenge. A lot of you are interested in that. So I'm working on that, how to put it together so all of us can participate in this fitness challenge. Look out for that. But meanwhile, all plans are as good as the action which you take. If you do not act on your plan, if you don't stay committed to do Tiffin Coffee range every time the market gives you an opportunity, then you will not achieve this 25 lakhs. No matter what you do, you cannot do it lump sum. You can't starve yourself one day and think you're going to get fit. You won't. Only thing is you'll feel miserable. Same way, if you go put 12 lakhs in the market today and think it's going to become 25 lakhs 10 years from now, it may or may not, but every time you see that 12 lakhs become 9 lakhs, then become 14 lakhs, and then drop back to 9 lakhs, it'll just make you feel miserable. So the right way about going about it is doing this Tiffin Coffee range investing, and most importantly is to stop checking your portfolio on a daily basis. You can check your portfolio once a month. First of the month, you see how you did for the month. How much money did you invest this month? What's happened this month. That's fair enough. Doesn't make sense if I stand on the weighing scale morning, evening, morning, evening, morning, evening. I'm not going to lose weight like that. All I'm going to get is frustration. Same way, if you check your portfolio too often during the day, it will lead to frustration. Check your portfolio once a month if you're doing Tiffin Coffee. But every day, log on, spend 5 minutes, pick a stock, buy and log off and move on and do other things with your life. Okay, so this is the best way to getting to 25 lakhs, because quite a few of you have asked this, how to get to 25 lakhs. So it's just being consistent. It is more than the amount, it is consistency. Amount is going to decide how fast you get to that 25 lakhs. But what will get you to 25 lakhs is your consistency. Is Manappuram getting overvalued? Well, Guru Shankar, Manappuram is a great company to hold if you're looking at it long term. There will be a little volatility in this price because of the Bain Capital deal going on. So you may see a little bit of price fluctuation. So if you're waiting to buy Manappuram and you're very keen on, this price sensitivity, maybe you can wait for this correction to come. I personally, myself, I buy Manappuram at this price or at any price because I'm looking at it long term. It's like buying gold. So right now, my strategy is I'm looking at companies which out of that list which we have, which are in deep value. Like Tata Motors today entered deep value. I decided to do Tata Motors, right? This question of Sachin is asking, is it worth considering Tejas? Tejas is a company which I've been talking about. Anand spoke about it. Then a lot of you are wondering why we're not talking about Tejas. Because Tejas is a kind of company which is going to take a long time to give you returns. It is a company which you will see a lot of pain before you're going to see any kind of growth. So if you already have a mindset to invest and you're willing to wait and play a bet on Tejas, then sure. But a lot of you are just new investors, and I feel it is better that you stick to the large cap companies which you usually do, and see yourself get a firm footing there and grow a portfolio there before you start taking these long term bets. Like Anand's always said, you can look at investing in 10, maybe 12 companies, and 20 years from now, out of the 12 companies you invested, 6 or 5 companies become multi-baggers. You're a winner. Not every single company you invest in is going to become a multi-bagger. There will be companies in your portfolio which will not grow or maybe even turn negative. So keep that in mind when you're investing in companies like Tejas or anything. We have seen big companies, large cap companies with famous names today that don't exist. So no one would believe at the time when they were being traded that they would disappear the way they did. So always keep this in mind. So this is the main reason I'm not doing Tom on Tejas Network. Am I looking at Tejas Network personally myself? Yeah, I am. But that is the same way I'm looking at a lot of the microfinance companies. I'm not going to see a promised return in it, but all things logic dictates things will recover, and if the right people are behind it and the right impetus is there and the product is good, it should recover. But there's no guarantees in this. So Tejas Network is a great company. Tatas are involved in it. The CEO recently exited for some personal reason. I don't know why he exited, but so we have to wait and watch, and then we will see. Right. PG Invit. Very funnily, Ajay is asked about it here, saying I'm holding 800 PG in the portfolio, looking forward and staying invested for the next 10 years. What is your future view, or should I hold it? Is it a good choice? And IG Surya is also asked, which has been voted up here. PG Invit is a good stock, but there could be potential upside in the long term or long term only. Okay, basically what you guys want is you want to have your cake and eat it too, as they say. Because you can have one of two things. Either you can have capital appreciation, that means you put 100 rupees and that 100 rupees becomes 400 rupees over a long period of time. Or you can have great dividend payout. That means anytime the company makes a profit, they keep handing it over to you. Right? So in the case of PG Invit, the second is what is happening. The latter is what is happening. They're taking all their profits and they're giving it to you. When that is the case, nothing can be left, in the pot for you to have capital appreciation. So keep that in mind. You will see growth. I'm not saying you will not see growth, but that growth will be nominal compared to something what you might see in an ITC, what you might see in a Tata Motors. what you might see in any of the other ones. So keep that in mind when you're buying PG Invit. We are buying it like another option for a bond. If you can't afford to buy a bond and you have a few rupees lying around, you can look at a PG Invit, and collecting it will give you dividends. But in terms of great appreciation in capital, you're not going to see it. Even in the long term, there are other places which will see much better returns. I'm not saying it will not see any return. It will definitely see return. Everything sees return. But you're comparing it to something else, you may not see it. So keep that in mind. But you would have recovered all the capital which you put into it too, because by the dividends they're paying out. Gold B's buying range, please. Looks the price has gone up. Is it safe to buy? Yeah, Sai Autos. Gold is always good to buy. But if you have already 5% to 10% of your portfolio, that means out of every 100 rupees in your portfolio, 5 rupees is in gold. You've done more than enough gold. So don't just keep buying gold, for the sake of it. If you're looking at long term and you're doing this for 10 years plus, 5% to 10% gold is more than enough. 10% is very conservative, 5% is nominal. But I'm not saying you shouldn't have any gold. We're not Warren Buffett. If you're Warren Buffett and you're sitting in billions of dollars, then you can say, I don't want any gold. We're not there. So keep that in mind. You should say 10 portfolio, not more, but Anand says suggests accumulate 200 grams. Which do I follow, sir? HS, H. Sendin HS. I don't know how to pronounce your name, dude. But anyway, it's a good question. That I say 10% of your portfolio could be and not more, but Anand suggests that you accumulate 200 grams. Anand is suggesting 200 grams of gold for a completely another reason. I'm also for that reason. There are two things which you guys are getting confused. One is investing, one is security. Gold offers security. A lot of people survive horrific wars and very bad things in life because they have gold in their hand. If you are displaced from your country due to a natural calamity or a war or a financial crisis in your country and you have to exit, you take your gold, physical gold with you in your hand, you go to another place, you can restart your life. A lot of people have done that. They went to the US after World War II with nothing but gold in their hand, and they restarted their lives with the grams of gold which they had. So that is the idea which he's talking about. So that sense of security, Chennai floods happened, everything in your house got wiped out, but you have your gold. That gold can help you restart your life. California fires happened. Your entire house is burnt down to ashes. There's nothing left. Insurance company is not going to pay you anytime soon. But you have 200, 400 grams of gold. That's going to help you restart your life. So that is what Anand is talking about. Now the second thing, what I'm talking about, which is investing. Investing in your portfolio, right? This hedge which I'm talking about, which is where I'm saying keep it as ITBs, gold Bs, not ITBs, sorry, gold Bs, Nippon gold Bs, that is in the investing portfolio. That I'm talking about market movements, right? When markets go to a bear cycle, gold holds your portfolio up. That is what I'm talking about. Riding through market cycles to keep your portfolio safe and buoyant and to cut your losses in market cycles. 5% to 10% of gold gives you that security. So that's what you'll see when market crashes, gold goes up. So it gives you that protection. Your portfolios will not be as bad as the Nifty is. The Nifty might be down 10%, but you might be only down 6% because of the gold. So that balancing of your portfolio is the gold which I'm talking about. But yes, the gold which Anand is talking about, 200 grams of gold, that I strongly suggest you keep it physical. Anand also says that to keep that physical, because if you need to go up and run and restart your life, that physical gold cannot be discounted. It's the same way of having insurance. So some physical gold is good for you. The gold which I'm always talking about is investing gold, which is there in your portfolio. I'm never talking about buying physical gold. So when you get confused, I can understand. What is Anand saying? Vinod is saying no need for physical gold. He's saying buy gold Bs, and Anand is saying physical gold, and Anand is saying 200 grams. Vinod is just saying 5%. So there are different aspects to this. One is also keeping sure you have emergency fund. You cannot take a job as guarantee. You can get laid off. So you should always have 6 months worth of your monthly expenses as liquid cash in your account. You should not take that and invest it. Because let's say you've invested it, the market has crashed, you lost your job, you have EMIs to pay, school bills to pay. What are you going to do? You can't sell it. If you do, you'll feel very crappy about it because you have put all that emergency money in the market and then it's in a loss and you're selling it, you're losing money. So keep that in mind. There are different aspects here and each one should be done. That's why Anand says you come to investing last. So when I'm talking to you, I'm assuming that you have done all the other steps. You've gotten rid of all your loans. You've got yourself health insurance. You've got yourself term insurance. You have achieved some level of gold. This gold alone, I can understand. Nobody can achieve 200 grams of gold instantly. So you take time to build that. But the rest of it, liquid cash is a must. 6 months worth of money in your account is a must before you do any investing. The only thing which I can give you time on is 200 grams of gold. That 200 grams of gold, physical gold, you can accumulate it slowly. Every year you buy 1 gram, 1.5 grams slowly, and as your salary improves, as your situation improves, as you see returns. Let's say you've invested in some bonds, but you're still investing in equity through Tiffin Coffee. You can take some of that interest from the bonds and start buying some physical gold too. So you have to figure it out how to manage these funds and to keep it. Physical gold, 200 grams, does have the issue of storing it, which you will have to figure out how to do it. The best way is to keep it in a locker, and locker charges are there. And I know all of you will immediately say locker cost is that. That's why I'm saying accumulate it slowly. Don't try and accumulate all of it at a go. So anyway, I hope that gave you some clarity. But I can offer more clarity when I do get to meet each one of you individually, if and when that happens, because then I can talk and understand your situation and offer you the right advice. Because all the things I'm saying here is very, very generic. Like Naveen is saying, I'm a third year student, I have 24 Tata Motors, 30K in portfolio and shares, will invest in Tata Motors. Okay. I'm a third year student, I have 24 Tata Motors. I really don't understand what that means, Naveen, but I'm assuming you're asking, you want to buy more Tata Motors shares? Sure, you can buy more Tata Motors. If all your portfolio is in Tata Motors, I'll say buy other things too. Just don't keep buying Tata Motors and nothing but Tata Motors. That's not a very smart strategy. Try and break it into pieces. That is a better bet to do. I'm getting into some spam call. Right. So now Divya Santa Kumar is asking, I'm a beginner to mutual fund and stocks. Suggest some for best sipping in mutual funds to start with. Well, Divya Santa Kumar, I would suggest strongly that you invest in Nifty 50 fund. There's a passive fund. Start investing in that, so you don't miss out and don't have FOMO. And try and learn about stocks and how stocks are bought and how stocks are analyzed, like what Anand is talking about, I am talking about. Read books and then slowly start buying stocks. But as a beginner, you can start investing in the Nifty 50 fund, UTI, whichever you want to pick. As long as it's a passive fund, you can go ahead and invest in that to start with. Spoke about this. Okay, Kavita is asking, now which would be preferable for Tiffin Coffee? Banking sector, IDFC, Karnataka Bank, South Indian Bank. Well, I do not know your Tiffin Coffee range. If your Tiffin Coffee range is 50 rupees, then South Indian Bank. If your Tiffin Coffee range is 100 rupees more, you can look at IDFC and South Indian Bank. If it's more than that, then you can look at Karnataka Bank. All three of them are great. If you ask me, I would say right now IDFC and South Indian Bank. If I had to only pick one of them, I'd probably pick IDFC right now, the mood which I'm in. Denij Rocco's Uzi I9. Wow, you guys have got some creative names, man. What are the upcoming stocks you might consider adding to the Patas list? Mention at least one stock from each sector if possible. Well, my list is Tata Motors, ITC, Jyoti Labs, the bank side, I've said IDFC, South Indian Bank, Karnataka Bank, IndusInd Bank, Then what else is there? I'm sure a lot of you, Manapuram is there, and wait, let me see, where's my list? I'm sure a lot of you will immediately start prattling on down there, but you guys are rather quiet today. Let me see. What else is there? Where are my notes? Dr. Reddy, of course. Natco, of course. IDFC, I've said. IndusInd Bank, ITC, Jyoti Labs, Karnataka Bank, Manapuram, Natco, Goldbees, Tata Chemical, Tata Motors. So I think that covers about most of them, yeah. So Div is saying I'm holding Tata Steel, Manapuram, ITC, Goldbees, Natco Pharma. Yeah, these are all great stocks for 10 years plus. Tata Steel alone, you might wait for a better pricing, but it's a good company, Tata Steel. So I don't know what price you bought it at, so I'm assuming you bought it at a great price. I'm earning 55k a month. Rohit Royce is asking. Investing started in 2021. Currently 3 lakh in stock, 1 lakh in FT, 30 grams in gold. Is that correct method? Yeah, it's a fabulous method, Rob. And congratulations, Rohit. That's a lot of effort you put together. I mean, you should be proud of yourself, and I'm proud of you too. Investing 55k consistently every month since 2021, 4 years of that is some solid investing. So I'm very proud of you for that. 30 grams of gold must be making you feel quite happy right now, looking at where gold has gone. Vignesh Jaibal is asking, is Prairik Cap, a Flexi Cap fund any good for the long term? Yeah, it's a good fund. If you want a Flexi Cap, the Prairik fund is a good Flexi fund to invest in. Yes, they do invest on some American stocks. So that's a good one. What is your view on Lalita Jewelry IPO? I'm not touching it. Positive Attitudes quote is asking me. I'm not touching Lalita Jewelry IPO. I'm not touching any IPO. Even the case of Tata Capital, I'm waiting for more information because right now it is being priced in the grey market very high. We'll have to see where is Tata planning to put this price on this IPO for us to get a lot more clarity. So I would wait for this. Meanwhile, someone's typed Krishnan AMK. It's Krishnan. I have emergency funds, health insurance, stock holdings of 3 lakh, started accumulating gold, currently looking at bonds, looking at good term insurance. Am I on the right path? Yeah, Krishnan, you're on a great path. I do not know more than this. I would love to know more, but from what I'm reading, I would say yes, you're on a great road. There's no problem. Traveler Dana saying, we are expecting markets to go down today, but it went opposite. Can you please tell me the reason? Why? It's known as liquidity, my friend. There is no real reason for markets to suddenly feel cheerful. I was also thinking the market would be negative, but there's a lot of liquidity in the market, and the US figures and US numbers are not looking so bad. So they've decided to, I mean, these are all hindsight, okay? Traveling Dana, looking back, I can, say anything. You can analyze anything and put nice words to it and kind of have a convincing argument, because sadly this whole thing is not black and white. It's completely gray. It's just social science. So it's more like trying to read tea leaves. And honestly, I think it's a waste of time. Especially if you're looking at different coffee investing, I would rather that you just focus on finding the shares which you are looking at, the companies you're looking at, invest in your different coffee and move on. So what if the market goes up today or the market goes down today? I mean, who cares? Tata Motors, when it opened, went down almost 5%, then it recovered and went up to minus 3%. So who cares? You buy the small tiffin coffee and log off and move on and do other things. And worrying about these things is not going to lead to anything other than wasting time. Imagine the time, it's as bad as sitting on Instagram and scrolling, doom scrolling. Sitting and reading about market news and why it's not going up and why it's not going down. It's as good as doom scrolling. I'm not saying you should not read at all. I'd rather that you read about company-specific news. You're talking about what is happening in a specific Tata company or a specific American company like Apple. Then I would say you're spending great time. But reading why the market is moving in a certain way, I don't know if it's going to help you initially to start with. Once you understand market news and market cycles, sure, it can help you, but we are looking at individual stocks. I would say pay attention to individual stocks. Mukesh MDA is asking, can we invest in NPS for retirement? I don't know. Should you? Because where does NPS and everybody else make their money? Everybody makes their money in the stock market. So when you can directly invest in the stock market, why not? But I understand if you do not know anything about the market, you don't understand anything about mutual funds, and this whole thing looks very scary to you, then at least NPS is good. It's great that way, because then at least somewhere you're creating a retirement fund. Some investment is happening. But if you understand how markets work, you understand how stock picking works, you're able to buy stocks and not get paranoid and worried about it. It doesn't give you sleepless nights. Then your retirement fund would be better served being inside the equity market. Like I said, you have to understand what is happening. If you don't understand anything and you don't have the bandwidth to understand it, then stay in the regular lanes, whatever people are talking about. But I constantly encourage people to come and see what we're doing. You don't have to start investing as soon as you watch one of Anand's videos. You don't have to start investing Tiffin Coffee as soon as you see this group. But by participating and seeing other people doing it, it's like going to the gym first. You don't go the first day and try lifting weights and running on the treadmill for half an hour. Go and see how the gym is, see what is happening. Come a few times, see how it feels, see if you're able to be consistent. Is it something you want to do? Then, you can venture out and see if you want to do this. Is ITC in great range? Abhilash official is asking. ITC is in great range, and can I have a full meal? No, you cannot have a full meal at ITC. I would strongly suggest that you keep staying in Tiffin Coffee range. And Badri Raghavan, which multi-bagger stock can you recommend to your sincere follower to buy? And on what basis? I am assuming all people who are in our tribe are sincere, at least about investing. You don't need to be sincere follower of me or Anand. As long as you're doing your investing sincerely and you're paying attention to what you're doing very sincerely, Raghavan, you'll be okay. No one can predict what will become multi-bagger. Everyone can claim that they can see the past, because the past is very easy to see. I can do multiple videos telling you if you had done something in 2021, 2020, today you will have 5 crores, 15 crores, 20 crores. What good is that? And there's no guarantee if you put the money in the same thing today that 5 years from now you will have 15 crores, 20 crores. But it does work. That's why I say invest in 10 to 12 companies. Few of them, 4, 5 of them should become multi-baggers, because history looks like that. Companies are good. You've done the right way of investing, buying at the right prices. It will definitely be multi-baggers. Not all of them, at least 4, 5 of the 10 of them. Then Samyuk Udan is asking, 20 lakh in account is idle. Can you teach me how to invest it properly? Well, if you have 20 lakhs in your account sitting idle, I will strongly suggest you buy some bonds and take that interest in those bonds and invest it into equity. And that will be the best way to keep the 20 lakhs safe. And it will be as good as sitting idling in your account. Instead of sitting idling in your account, it will be sitting idle in a bond where you're getting this interest. And you take that interest and you invest it. Yes, and I did put up a Google form. A lot of you did fill it out. I have over 1,500 responses, and my team will slowly start calling out. My team is me and my dear friend Mr. Hussein, who's my assistant. Hussein, who's in Chennai, will start reaching out to you guys in the time frames you've asked. I'll also be reaching out in those time frames you've asked. And I've just brought Hussein, my assistant, in because I did not expect over 1,500 people will fill that form out in a matter of a few hours. So let me first get through that, and I'll keep that form open. So you guys can always keep filling that form out whenever you want help regarding how to invest in bonds. Till Anand figures out another more fabulous way of staying connected with you guys. That's what I just said. Rana Ranjit, I've tried to connect with you in the bond directly only. We'll get in touch with the fresh new joinee in Bangalore. It'd be great if I can connect with you directly. And I know you spoke to that fresh new person in my office in Bangalore, but were they able to help you out is a question. You've not explain that a little more. If they fail to give you the information which you need, then do reach out to me, and I'll be more than happy to help you out. As far as what's been happening in the Indian market in terms of news, I don't see anything which was like earth shattering to me, which I thought would be great of interest to talk on this, other than this interesting thing which Apple did. Apple designed a AI paper that came out as sparked debate on the limitations of LRM, which is a learning model, large reasoning models, which are built on your OpenAI and all that. And I've been saying this fabulous book which I read, AI Snake Oil, talks about that, how generative AI works, how predictive AI works, and how a lot of snake oil is there, and most of these can do mediocre to a little bit higher than that. But when it comes to doing really complicated things, all your reasoning models tend to fail. So, AI is good. Guys, use it. I use it. I encourage everyone to use it. It's like having a calculator, a very smart calculator. It can help you do things. But don't rely on it. Like I was talking in Coimbatore event, a lot of you are asking, do I use AI? Yeah. You cannot give AI annual report and say, tell me this is a good company. It will just give you nonsense, because AI tends to hallucinate. Hallucination happens when it starts imagining facts. I asked it a simple question about a stock which is being traded in the US, saying how much any stocks do I get in Japan for each one I'm buying in the US. It gave me a completely wrong figure. And that was a simple task. It had to just go to the New York Stock Exchange website, pull that information out, come back and give it to me. And it failed over there. So these kind of simple things, it can fail. So you cannot rely on AI to sort your problems out. But it can help you, improve your writing, your reasoning, debating with someone to argue and, discuss an idea. All that AI will be great with. But AI will not be able to do very complicated things and, replace everything. In creative realm, generative AI, yeah, sure. Creating a photo or helping create a video. Sure. Maybe in the future, like a lot of the memes are going around, AI generated videos will be almost being sold for free because the capital investment them are very much lower than a regular movie. True, it might happen, that kind of disruption. But I do believe that people, mostly human beings, like interacting with other human beings. If we did not like interacting with other human beings who are live on the other side, why would I be on Instagram doing a live feed? Because I know there's actual human beings talking to me. Why would I create a different coffee, range group? Because I want to be in a group where I'm interacting with actual human beings on the other side. Even if they get angry with me and say very, mean things to me, it's okay. I can still feel like, okay, this is still a real relationship than something on AI. So I hope I gave you some clarity on the stuff that's been happening. Coimbatore was fun. I got to meet a lot of you on Anand's events, because Anand's events are huge. First day, some 800 of you came, the next day almost another 500, 600 of you. So it's a lot of you who I got to meet, and really it was a lot of fun having conversations in person. And we'll try and do this more, try and meet you guys more, especially in Chennai. Once I'm back, every weekend I'll try and be in Marina Beach or Besanagar Beach, alternating one to the other, ping-ponging back and forth, and try and meet a few of you here and there, because these conversations having face-to-face is a lot better than these one-way conversations where I'm reading a comment and offering some information. Anyway, that said, do watch the Be Rich video today. Like you've asked, I've spoken about IBKR and in money, which is better and what I think about it. And let me know your feedback on that one. Do you use IBKR or you think in money? There are some issues with in money. There are some issues with IBKR, which I've highlighted. And I would love your feedback on that too. Anyway, thanks for watching this live feed. I will be more consistent going forward. Sorry I missed a few days in the middle. I'll definitely try and make it up going forward and be more consistent. See you guys on the other side soon.